Gold and silver prices in US dollars are finally starting to rally again, with gold prices as of the recording of this video back above $1,850. It is a welcome sight for those in the gold and silver community. Although a lot of good gold mining assets lately are being bought for pennies on the dollar, unfortunately, because it is a buyer's market. So larger gold miners like Agnico Eagle and one of Australia's largest gold miners are buying deeply discounted cash flows of producing Canadian gold miners at very cheap valuations compared to probably what they should be. So the Russian government and the Indian government are accumulating massive amounts of gold. We've gotten data coming out lately that the Indian government has been buying a lot of tonnage of gold lately, especially in the last 12 months. Over 75 tons of gold has been added by the Indian government and India Central Bank. And I'll attach a couple different articles below that in the information and description section. Private sector Indian demand is also exploding. But the big spikes in private sector gold demand are not only in Germany, but also in China, where there's an absolutely enormous spike. But I wanted to talk in this video about a couple interesting topics in the gold market there. So you had a Wall Street investment bank named Jefferies, and they're not known as one of the best investment banks, but they just sold basically all of their gold fund, liquidated it. Arguably one of the only commodities that's not been in a bull market the last 12 to 18 months, because the US dollar gold price has been in a mini bear market since September 2020. But they just liquidated their gold fund, which is probably paper gold, to go and buy Bitcoin in a Bitcoin fund, while Bitcoin is near either at or near an all-time high. So that sounds similar to the contrarian indicator of when the Bank of England and also Canada's central bank liquidated their physical gold in the late 1990s, and that marked the end of a gold bear market. We may have a similar situation here with gold finally starting to rally. The other interesting topic I wanted to talk about was this in-depth article that Ronan Manley of Bullion Star put out about a month ago, or in early October, about how India's central bank has been accumulating a lot of physical gold. And in his opinion, if you read the articles in depth, I'll attach a link to the entire article below the video in the information and description section. He lays out how the Indian government and India's central bank basically do not have at least 400 tons of physical gold that they claim to have, and they've been accumulating massive amounts of physical gold the last 2.5, 3 years to try to make up for over 400 tons of physical gold that the Bank of England and the Bank of International Settlements may have stolen or confiscated. So the Indian government and India Central Bank are accumulating a lot of physical gold now. We're seeing this in the data. The paper gold price was capped for a long time, but it appears to be breaking out. If gold can hold above 1850 for at least a couple days, maybe a week or two, 1900 in the next couple weeks should not be difficult if it can hold above 1850 with some strength. But gold is showing a remarkable rally despite the Fed announcing a taper and despite the dollar index holding up pretty strong. The dollar index, I'm pulling it up right now, is actually well above 94. It's almost to 95. It's at 94.91 when I'm recording this video. Also, if you're interested in physical gold, my friend Joseph, who is a friend of the show, he is also a patron, has a YouTube channel called Premium Tracker Silver Stacker that is free. And once a week, Joseph goes through online bullion dealers looking for the best premiums on gold and silver coins and bars, and also numismatics. Again, that's Premium Tracker Silver Stacker. He does a good job over there on his YouTube channel monitoring premiums if you're looking at stacking physical gold and silver, either coins or bars or numismatics, and he checks the premiums for online bullion dealers once a week. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content research, financial education, and analysis than I provide in these short little free videos, there are now over 190 articles, charts, and audio podcasts behind my paywall, all for the cost of a Starbucks cup of coffee, only $5 a month, exclusive for patrons. And just in the last 20 or so weeks, there are now 33 new articles and audio podcasts, including 3 new articles and audio podcasts out in the last week. The uranium update's out. An update on the gold mining industry for Q3 is also out. And this week, I also put an article out about valuations for so many different asset classes. They're getting absolutely absurd. There are almost zero good bargains out there other than gold stocks right now. Everything, if you look at valuation wise, is massively inflated thanks to the Fed, other central banks, and the Cantillon effect. So if I could wrap up this short little video very quickly, central banks are enormous net purchasers of physical gold. The Indian government and India Central Bank are buying a lot of gold. Russia's government in the last couple weeks just announced another public purchase of physical gold with their trade surpluses. And Chinese private sector demand of gold is absolutely exploding. Samson Lee, the analyst from Willem Middelkoop's Commodities Fund on his Twitter, has been putting out even more videos lately of very long lines in mainland China to buy physical gold. The trend of physical gold demand in the private sector in China is only accelerating. Chinese gold ETFs are bringing in record amounts of physical gold as well. So it was predictable that if gold demand from central banks and the private sector in India, China, Russia, Germany, many other places was going to continue to increase, the gold price at some point, when the gold price was in the 1700s, was eventually going to bottom. I've said this in the past, when there is big spikes in physical demand, they often precede big moves in the paper price. And we've seen this in the past. I've been in the gold market covering gold and silver stocks, covering the gold and silver industry for about 15 years now. Next year in 2022, it will be around 15 years. So I've seen when there's big spikes, big increases in demand for physical, they do often precede big moves in paper prices. I know a lot of people have no patience, but it does look, especially if gold can hold that 1850 level for at least a couple days, maybe a couple weeks, we're going to move substantially higher.